Hi, welcome to the Market Alert for Wednesday, the 5th of June 2019. So, yesterday we saw the market moving higher. We had a big squeeze on, a short squeeze, the biggest in 5 months. And a short squeeze is where the shorts get out. And of course, if you are net short, you have to buy the contract back in order to get out of the position and to close it. And this, of course, makes prices move to the upside. So if we have a look yesterday, this is the Dow in the pre-market session. I'm just going to make this a lot bigger so you can see it. And just bring this in a bit. So this was during the pre-market session. You can see how the market came down to the 200 bar moving average. You've got a retracement here, and you see the buying coming in. Well, the squeeze starts early on around 8 a.m. I'm just going to fast forward through all of this so that you can see how prices moved a lot in the pre-market session, staying above the 20 bar moving average, trading up to the R1 there. And then we saw this spike here, and then you'll see the market sideways, so a shoot up there around 1 o'clock. This is when Powell is to speak, that we spoke about in yesterday's alert, and you'll see the market trading sideways. So why did the market stop at this level? I'll show you this in a moment as we fast forward. Alright, so this is where I want to be. Okay, so now look at the daily chart, the 76% retracement that we drew in yesterday. The market traded to this area, had a breather, and then started to move again. And this is the area 25.039. And if you we just go back here, it was 25.041. If I can take it back in smaller increments. The trouble is when you collect 10 hours worth of video, it's very difficult to be able to just go back to the points that you want. All right. There's the 042, which is on the high of the selling pressure bar. And then if we just go forward a bit more, and this is in the pre-market session, but it's always fascinating to see how these things pan out. So into the main event now. And then Powell is speaking. It's probably the only reason you would stay out of the market. As I've said many times, all of the other economic data indicators don't seem to make any difference. But given that Powell was disconnected from Trump, but now appears to be on board with him, he was making all sorts of comments yesterday. If we just bring this down, you will see dovish Powell slams yields dollar as he opens the door for more unconventional measures, as he now calls them, and is intending to drop the word as well, unconventional measures, because they're going to become conventional going forward with the yield curve inverting, heading for recession. He's quite open to reducing interest rates now, and also looking at negative rates, and also QE as well. So Powell's speaking. He gives the market what they want, as you'll see in just a second. And you see, bang, we're off. And then prices start moving to the upside. I'll go and check the daily chart just to see what we've got here. And we can see that we had this selling from 2 days ago on Monday. And then the buyback yesterday. And the squeeze is well and truly on from this point forward, and you see prices moving higher there. And I keep checking back and having a look, and the market continues on up there all the way through to the end of the trading session, which you see there. So yeah, things moving higher for the Dow there. We've got just get rid of this bleeping in the background and bring back the Dow chart. There we go. Let's just move this back now so you can see it. So yeah, overnight prices continuing to move to the upside as well. We've had a bit of a jump, but some profit taking coming in there at the moment down to yesterday's close. Let's step back, have a look at the bigger picture and see why. And we can see immediately why we've got this issue, and that's because the market is trading up to the 200 bar moving average. The question is, will it drive through? Well, yesterday we didn't see a massive increase in volume. Short squeeze, market moving to the upside. I think the short squeeze personally took place the day before, given what we see here, and then prices moving higher on what Powell had to say. So it's going to take something special to move the market higher today, and given that we don't see any sort of Bullard or Powell or any of the other Fed members coming out, only manufacturing PMI really isn't going to do it, and certainly these numbers aren't going to do it, because more or less the same as last month, so stagnant as far as this is concerned. So we can have a bit of a tidy up here. We'll remove the downside targets as the market's moving higher at the moment, and we're back through this one that I marked up yesterday when the market was traded as well, 25,370. What I would be inclined to do to keep a perspective of the bigger picture here is to go from the low to, well, I can't go to today's high. It won't allow us to mark that up. It's marked up the day before. So there's not a lot we can do on the downside apart from if we click twice on the low, this will give us a downside target if we get a straight reversal. And it's not uncommon for the market to actually do that after a day of moving to the upside. Certainly there's every chance of this happening, as there is for the market to move to the upside. So again, it's always important to look at both sides. The market will have to go through the 200 bar moving average, and as soon as I draw off this high and this low, you can see that we've got resistance here at 25,449 as well. So quite a resistance area here for the market. So the pound for yesterday, not a lot. Again, still waiting to see what's going to happen down in Westminster. Theresa May leaves on Friday, doesn't she? 7th, if I recall. Tomorrow's 6th. So again, we'll see if the market reacts to this and how it reacts to it. But at the moment, not doing a lot. Moving up slightly there. A bit of an increase in volume, and through the 76% retracement for yesterday, drawn from this high to this low. What I would be inclined to do is to draw from this high to this low as well, just to keep on top of what this market's doing, and that coincides with the 50 bar moving average there. So 12752 is the area we're looking at there. And Bitcoin flashing around this morning and making a lot of noise. Let's have a look in the daily chart. We traded down to the 76% retracement we drew in yesterday of 7660, and we see some buying pressure in this market. You can see this here. The volume is greater, the range of the bar is less than the previous day, i.e. Monday's bar. So finding a bit of support here, and there's some buying pressure, so we could see a bit of a bounce before the correction continues to the downside, which I would be inclined to draw in here, 7435. If you're short, watch this level, because it will need to take out yesterday's low. I will also want to start drawing in from here up to here as well on the downside, and that takes you down to the 7,000 level as well. But at the moment, finding support in this area here. On the upside, I would go from this high down to this low and have a look at how prices will be affected there. And you can actually do this as well. If I click twice on the high of the buying pressure bar, also watch this level as well. So the 4 hour, the market finding support at the 200 bar moving average, so no surprise there. And then in the 15 minute, we can see some activity here as well. I'm just going to reload this chart because this doesn't look right that we've got here. So let me just reload, as it's been open all night. Let me just reload it just to make sure that we are seeing the correct thing here. Yep, that's fine. So the market showing a bit of profit taking again in the current picture. But yesterday you can see a nice set of trades there. The range is back, and certainly on the downside there. Later on in the evening we had some nice movement, and at the moment we're currently short on the first trade there. Just mark this one up. Oh. There we go, that's how that should be. So Bitcoin putting a bit of pressure on there as well. So just to finish off, we've got a quick look at the implied volatility. This was 1764, but this was on Monday. Tuesday's quick refresh here. Let's see what it comes up with. 1594. So we're dropping off a bit, but still plenty on the upside for this market, with the correction to the downside continuing if allowed to do so. And then finally 707 for Deutsche Bank yesterday. The market moving back to the upside for yesterday's trading session there. Yields back up yesterday as well, but still inverted in the short-term treasuries there compared to the further out, so still an inversion in the yield curve at the moment. Okay, that will do it for this one. If there is anything to report, I will let you know, but as ever, thanks for watching. See you in the next one.